Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, thank you for coming on today.
Happy to be here.
With oil prices continuing to fall by double-digit percentages, stocks on Wall Street were down, the Dow by more than 2.5%, S&P more than 3.5%. What's the story in the global markets today?
Okay, well, today the Asian markets, Korean markets ended up somewhat higher, 0.89% for KOSPI, 1.02% for KOSDAQ. And so when the news about the negative price of oil hit yesterday, the market market fell, but it seems to be recovering almost all it lost yesterday today. Now, the other Asian markets were somewhat mixed. China and Hong Kong were slightly up, but less than 1%. And the Japanese market was down by 0.79%. I think the global market as a whole, they were somewhat optimistic. They were somewhat rising for a time because, well, in the United States, there was a possibility of ending the lockdown, and the light seemed to be coming around the corner. But with the negative oil prices, perhaps the market will be turning more pessimistic because now they're beginning to realize that, first of all, getting out of the lockdown may be more dangerous than at first anticipated, and people may not get out even though lockdown in the United States or Europe may be loosened. People might not feel comfortable going out and doing their economic activities. And also, I think companies and people are beginning to really realize that this might last longer than what they first anticipated.
Well, if oil prices stay low like this or could get even lower, what would that do to the Korean economy, and what's been the reaction here?
Okay, well, industry-wise, obviously, the most affected industry will be the petrochemical industry. They're right now caught in a squeeze because they bought oil, raw crude oil, when it was still expensive, but now the refined oil that they need to export or sell, the price of that refined oil has gone down along with the crude oil prices, sometimes by a very substantial degree. So they're preferring to store most of the oil since there's a lot less demand than there was before the coronavirus. And basically, Korea, along with most of the other countries, are running out of storage space. So the petrochemical industry will be hit quite badly until the demand picks back up. But the demand won't be back up until the coronavirus is controlled substantially. And it does signal that the global recession might last longer than anticipated because the future prices, even the further futures than May or June, they don't seem to be picking up. So we might be stuck with a very serious recession for an extended period of time. That's the worrying news. If there's one slight bit of good news here, that is that because the oil price has fallen, Korean import value will probably fall as well. That means there's a stronger possibility that even though export and import will probably both fall, Korea will maintain current account surplus, which means that there's a lower possibility that Korea may undergo a currency crisis.
That's a great point. But and we have on the nation's sovereign credit rating, S&P deciding to keep it at AA despite the coronavirus situation. What do you make of the outlook from S&P?
Okay, well, you have to remember that they only look at the sovereign debt. That means whether the government has the ability to pay back the debt. And the fact that Korea's debt-GDP ratio is only around 40%, I think is doing a lot to help. Most of the other advanced countries are in a much worse position. The U.S. has a debt-GDP ratio of about 100%. Japan has 200%. Other European countries, most of them are somewhere between 80 to 120%. So compared to them, Korea is in a good position. Korea has not been hit as badly economically by the coronavirus as the United States and Europe. They're under complete lockdown, so they've had basically a cliff fall in demand. Korea, at least so far, it hasn't been that bad. So I think they're taking both of that into account, the fact that Korea hasn't been hit that much, and the Korea's debt GDP ratio is still okay, and Korea's economic activity, even though substantially lower than it was before, is still going on, more or less. That places it above a lot of other countries. But we also have to remember that the credit rating companies cannot get too creative. Even though there's a lot of future dangers, they mentioned the possibility of a higher government deficit. They mentioned the possibility of problems from North Korea. They're not allowed to speculate too much because, well, their responsibility is to find the credit rating possibility of Korea repaying its debt at the current state. So they may be looking at solid dangers rather than possible dangers currently, but still, compared to other countries, Korea is in a fairly good position.
Got it. All right, Professor Young, we'll have to leave it there for today. Thanks so much for coming on and sharing your insights.
Thank you.